Hello, I'm Kate from UFXBank with your Week in Forex. Today we'll take a look at the week's highlights in review. We started the early part of this week with a minor continued dollar firming, which looked like it might be the theme for the week. Nouriel Roubini's comments made last weekend in the past would have sent the markets tumbling and the dollar would have risen. Instead, you had the USD sell-off while global equity markets continued to climb. You also had commodity prices on the increase, most notably gold. For a closer look at some of these events of the week and with a look to the week ahead, we're joined by foreign exchange analyst Martin Smith. Welcome, Martin. Let me open up the forum and get your take on this week's price action.
Okay, thanks, Kate. Well, this week certainly gave some very telling signs. Let's start with the remarks you mentioned regarding Nouriel Roubini. Okay, well, basically, he said last weekend that the markets have risen too high, too fast. Well, in months past, that would have sent equity markets tumbling, or at least tempered them.
Sorry to interrupt you, but the markets clearly did not act in that way.
Well, exactly. As I mentioned, there are a number of telling signs this week. Let's focus on this for a second. The fact that markets did shrug off his comments is important for a number of reasons. Most importantly, it means markets are no longer responding purely to fear, which also means markets are no longer acting irrationally. Now, the inference here, of course, is that these current moves in the equity markets are somewhat justified.
You say somewhat justified, but you also say that they're acting rationally. Are they justified or are they only partially rational?
Excellent question. And it's actually a great segue to my next point. You have a very conservative market right now. What that means is it's moving in quick steps as they respond to data. We used to have a buy and hold market. Right now, we have investors going in and out of the markets, taking profits along the way. Well, the flip side to this is that when they get back into the markets, you have a rush of buyers coming in and potentially inflating prices.
So what other moves caught your attention?
Well, briefly, of course, I have to mention gold. The new highs, of course, come on the back of dollar weakness, as gold is quoted off the dollars. However, gold has traditionally always been, of course, a safe haven asset. And I think it'll be very interesting to watch. This week's overall good news spurred the rush. However, I think in coming weeks, good news will have the opposite effect. Lastly, we have continued dollar weakness on the back of strong equity moves. I think actually this trend is pretty much here to stay. I do believe as well that the euro and pound may come under pressure so long as they are forced to maintain a monetary easing policy. As we saw this week from the ECB and the BOE, they're not in a position to tighten. Therefore, I believe weakness in these currencies will persist, with probably the greenback currently leading the way with the lowest interest rate. I must also touch briefly on the Aussie, showing distinct signs of bullishness. So long as markets continue in this conservative manner in which we spoke, and commodities maintain their current levels, coupled with the positive data out this week, I think we'll continue to see Aussie strength. I always caution, actually, after substantial moves, that you should leave room for a minor retrace. But I think the overall trend here will be bullish towards the mid-90s handle.
Well, Martin Smith, thank you very much for your take on the Forex market this week. And thank you for watching. Visit us at ufxbank.com for simple, safe, secure trading.